Guess it is. Okay, going live. All right, ladies and gentlemen, thank you for joining me this Saturday on our Saturday Live at 9:30 a.m. Pacific Standard Time. Today, unfortunately, Tammy won't be joining us because she is ill, so she's home recovering. So, we wish her to recover, fast recovery, so that way she can come back on our show. So today we're going to talk about Proposition 19. A lot of you have asked, what's Proposition 19, how it affects me, how I can transfer the property tax to my, um, you know, children without incurring, additional costs or reassessment, things like that. So before we do any of that, I have a couple announcements. First thing first, we have a property, again, like we always want to do is we try to encourage a lot of realtors to join our show and to kind of take a look at or advertise what they have on the market and talk about a little bit of what the real estate market is doing. Even though we are a mortgage company, we like to invite all the realtors to kind of join us and then kind of broadcast whatever they have. Now, we have a property in Los Gatos. It's a duplex property. It's pretty old. It's a tear down, rebuilt. The property is currently in the final stages of getting permits. And the plan is for a single family residence plus an attached ADU with kitchen, total 3,500 square foot, sit on a lot of a little bit over 11,000. The property is about $1.8 million, and the resale on that, we did our homework on that, it's about 3.8 to 4.2. So this is a very good property for anyone who are a builder or investor or looking into building a property in Los Gatos Hill area. We also have a commercial property in North San Jose. It's about going on the market. Again, all these things are not on the market at this time. It will be very soon. The commercial property is we don't know what the asking price is, but it's in North San Jose. It's about 1,800 square foot. Not a standalone building, but it's more like a condo type of commercial property. Interior, it's mostly made for office usage or like a law firm or a tax firm, things like that. So it is very centrally located. Around there's a lot of shoppings, place to eat, etc. and etc. So that is coming up on the market. Another one we are working on is a property in Saratoga. That property right now is about 1.8. Very nice property, over 10,000 square foot lot size. The property is in good conditions, but again, you can always make improvement to increase the price of that house. That house currently, I think it's about 1.8. Resale on that is close to $3 million. So like 2.75 if you do it right, rehab, and if you want to add an extra ADU in the back, again, it sits on a 10,000 lot, single story, very nice lot, a flat. So that is 3 properties that we have currently. Now, if you have any questions, please give us a call, 408-416-8260. Right now, let's get into Prop 19. We have a few information we want to provide for you guys. So we're going to do a presentation style today. Unfortunately, Tammy's not with us. Like I said, she prepped this presentation, but I'm going to take over and kind of present as much information as I can to you guys. And with no further ado, let's get into the presentation. So let's get into Prop 19, what it's all about, how it can help you save money, or how it can potentially make you lose money, I guess you can say. So either way, but if it affects you, great. If it doesn't, again, we'll figure it out how to help you guys. Okay. So California voters have approved a new property tax break for older homeowners in the state. So again, this is only for the state of California. We did other video where we mentioned about, selling your home in California and move to a different state. That is a correction on that. We want to correct that. It's only in California. But it does allow you to go any county in the state of California. So that is one thing. So the Proposition 19 means that those 55 and older, that means either you're 55 years old and or older than 55, you can blend your taxable value of your current home and the new one that you're going to buy. So basically you blend that value in there. So this is how it's going to work. We're going to explain to you exactly how the blend works. Prop 19 is basically give exemption to older homeowners, the disaster. So if you lost a home in a wildfire that we had in California, victims, things like that, you are allowed to take advantage of Prop 19. What does Prop 19 means? Again, it's for homeowners who are 55 or older, who have lost a home in a natural disaster, who may be afraid to move out of fear of higher property tax, can now transfer their tax assessment to a more expensive home 3 times in their lifetime. So before, you can only do that once in your lifetime. With Prop 19 that passes, you can do that 3 times. Okay, so technically you can move 3 times and transfer your property tax to the next home. Okay, I'm not going to go through all of this, but I'm going to just give you the highlights points of this. The exemption is expected to fuel home sales to encourage people who are reluctant to move because their tax bill would rise sharply. When Prop 19 got approved on November 3rd, 2020, voter approved Prop 19. Basically, it's a home protection for seniors, severely disabled families, and victims of wildfire or natural disaster act, which makes sweeping change to a property owner's ability to transfer their Prop 13 assessed value. So as you all know, Prop 13, it allows you to transfer your property to your heirs, your loved ones, and even that property is vacant or being a rental, the assessed value will not be reassessed. So Prop 19, what it does is that it allows that to continue to happen, but there are some minor changes which we will go into. The measure generally expand a qualifying home buyer's or homeowner ability to transfer the assessed tax or value and narrow the property tax benefit provided to inheritance of commercial and residential property. So we're going to go into a lot more details about what it is. I'm not going to read the whole slides for you guys, but you can always go back to the videos, and then you can kind of look at the slides and get the information. But we will also source the information for you, so that way you know where we got all these information from. New changes on the other half of Prop 19 will change the rule that apply to transfer between parents and children. Again, this is new rules, which we're going to get into details. Today, these family members can transfer by gift, sale, or inheritance a primary home of any value, and it won't be reassessed. So remember, current Prop 13 allows you to transfer any property that you own, that, your primary property, to a your inheritance, so your heirs or to your loved ones, and that property won't be reassessed, even though if you leave it vacant or rent it out, right? So Prop 19 will make that change. So each person can also transfer other properties such as rental homes or commercial and exempt up to 1 million of assessed value, not market. So just keep that in mind, guys. So a lot of people, misunderstand about assessed value versus market value. Okay, so we remember that assessed value tend to be slightly lower than market value, to give us a tax break, I guess you can say. But again, as far as market value is concerned, all real estate agent out there and also consumer, remember that the assessor or the appraiser who are working for the county, they technically don't tell you how much your house market value is. the buyer or the market dictate how much your house is worth, which is market value. I'm going to give you a quick example here. So for instance, I'm going to put my house up for sale. So even though on your tax bill, your assessed value, let's say is $1,000,000. Okay. So its assessed value is $1,000,000. And I put my house up on a market, and the market dictates that, say, okay, you know what, Michael, your house is going to get sold for 1.5 million. So the difference there is that, you know, we worry about assessed value versus market value. So even though the market value is 1.5, this assessed value is only $1,000,000. So just keep that in mind. So you are exempt up to $1,000,000 of assessed value, not market value. Okay. A married couple can transfer up to $2 million of assessed value versus market value. Transferring asset to your children before death has a downside. So we call it a step up. A lot of people who have, life insurance licensing, you understand what this means. I'm licensed in both, so therefore we call it a step up. So whenever there's a appreciation asset transfer at death, there's a step up value. So we're not gonna get into that details, but you can always call me, and then we can tell you what those means and how it affects you guys. Okay. Prop 19 is expected to result in a net increase in property tax revenue, of course, because remember, with Prop 19 happening, it allows a person to change property 3 times and transfer their assessed property tax 3 times in their lifetime. So instead of 1 currently. So because of that, they expect to have more money going into public schools, states and local government, firefighting agencies, things like that. So compared to current law, Prop 13 of 1978, guys, that's an old proposition, old law. Real estate in California is reassessed at market value when it changes hands. So when I sell the property to someone else, the reassessment will happen, right? So if I sold my property, like the example earlier, at 1.5 million, that property will be reassessed at $1.5 million. In between changes of ownership, the assessed value, also called the taxable value or tax base, can go up by no more than 2% per year. So that property that I sold for 1.5 million, the new owner will be taxed at $1.5 million. Every year after that, it can go up no more than 2%. So now it can go up to 2%, it can go 1.5, it can go 1%. It all depending on the whole area of what your property or where you're located. Okay. An increased index to inflation. So again, it depends on inflation. So it all depends on what the county assessed, but it cannot go more than 2% per year. So even though, let's say, inflation goes much higher, you max out at 2%. Okay. Property tax average 1.2 of assessed value currently. Normally taxes goes up when the property turns over because market value had risen more than 2% a year over the long period. Okay, the summary of Prop 19, I know there's a lot of information. I'm going to give you a very quick summary. Basically, it allows person who are 55 and older to sell your property and transfer your current property tax value to another property that you're buying in the state of California, regardless of county. Okay, so that means you can go anywhere in California, buy another home, more expensive, and you can transfer or blend some of the value that you currently have to the new property. And I'm going to tell you how that works in a second. Effectively April 1st, which is coming up very, very soon, Proposition 19 permits eligible homeowners defined as 55 and over, severely disabled, or has been destroyed, the property has been destroyed by wildfire or disaster, to transfer their primary residence property tax base value, okay, or assessed value, to a replacement residence of any value anywhere in the state. Okay, so that's effective April 1st, 2021. Under Prop 19 and pending clarity from the legislature and the BOE, Board of Equalization, they can keep their lower property tax bill when moving to another home anywhere in the state. Like I said, anywhere in California. They can use the special rule to move to a more expensive home. Their property tax would still go up, but not by as much as it would be for other home buyers. Meaning, The same example, $1.5 million. I sold, so my property is assessed at $1 million. I sold it for 1.5, right? My property tax bill is assessed at $1 million. So I pay about 12,000 at 1.2%. So that's 1,000 per month. Now, if I buy another property of 1.5 million, I'm gonna bring some of that over to the new property versus whoever just bought my home at 1.5, they're gonna pay $1.5 million in property tax, okay? So use the special rule 3 times in their lifetime, and there's no limit on the numbers of times the benefit can be used. So you can transfer that 3 times in your lifetime. To receive the expanded portability benefit of Proposition 19, homeowners must complete at least one of the transaction on or after April 1st, 2021, and the property owners have 2 years from the transfer of the first property to complete the second. So that means, you know how like back in the days we can allow you to do certain things. Here you need to be able to transfer. If you want to do this, you have to do it within 2 years after your first transfer. So you're able to do this more than once, but the stipulation is that you have to do it the second time 2 years from the first. Okay. Proposition 19 also supplements existing transfer provision exclusively for victims of wildfire or disaster and owners who are severely disabled. So these are some of the stuff that, important details of April 2021. I'm not going to go to FAQs. You can look at it, go back and then call us if you have any questions, because there's a lot more information I want to go through. Next one, sources. You can go into the boardofelqualization.ca.gov. So www.boe.ca.gov/prop19. This is where we get some of the information. Of course, there's other sources we kind of mention, so that way you can go and find out what Prop 19 is all about. This is another, this is from the Board of Equalization. We did a snip on this, so that way we can, show you a little bit about this. Again, go back to our videos and take a look at it, or go onto the Board of Equalization website and then find this chart. And if you have any questions, please give us a call. Narrow special rules for inherited property. So this is very important, guys. Starting February, which is already passed, Prop 19 narrows substantially the property tax benefit for inherited property, specifically the measure saying narrowed the assessed value that can be transferred to 2 kinds of inherent property. So property used continuously by the children or grandchild as a primary home, or property held as a family farm. So this narrowed down what they can apply this for. So again, we're going to give you a quick example. The assessed value for inherited homes or farm would go up if the price of the property could be sold for exceeds the property's assessed value by more than $1 million. So for example, if the assessed value were $250,000, that's your current assessed value, and the market value when transferred was $1 million, the children would retain the $250,000 assessed value. Alternatively, if the market value exceeds this limit, which is over $1 million, partial relief is available. For example, a family home that has an assessed value of $300,000 with a market value of 2.5. Remember, it can go up to, you're exempt up to $1 million. So this is the example where you sold it for more than $1 million. Okay. Oop, let me go back, guys. So so the market value is 2.5 when transferred. Okay, will result in a new assessed value to the children of 1.5. So remember, you are exempt for $1 million. The assessed value was 300,000, right? So basically, you take the 2.5 million, you subtract, or you can go either way. So let's do the assessed value currently is $300,000, and then you are exempt with Prop 19 benefit of $1 million. So that equals to 1.3 million, but the property is valued at 2.5 million. So you take the 2.5 and you minus the 1.3. The difference is $1.2 million. So that $1.2 million, you had to add it with the assessed value, your current assessed value of 300,000. Therefore, your adjusted base year value is 1.5 versus 2.5. So basically, you get $1 million off. Okay. So yeah, it's not a complete, transfer, but again, instead of paying a value of 2.5, you're paying that 1.5. So you save some money there. If you use $1 million at 1.2%, you're saving about $12,000 per year in property tax. Starting February, which already passed, I think this is one that we went through. All right. What's going on? Sorry, guys. My screen is acting up. Okay, something is going on. All right, guys. I think I know what happened. All righty. So basically, give you a quick example of parent-child transfer. Prop 19 makes the previous parent-child exclusion operative for purchase or transfer that occur on or before February 15. Since February 15, 2021 is a state holiday, purchase or transfer that occur on February 16, so that's the day after. Yes, except for transfer of property by inheritance. The assessors will accept documents notarized or record as long as one of them is on or before February 16. Next question, Prop 19 requires that a family home continue as a family home of the transferee. Must the family home continue as the family home of all transferee? No, only one person needs to maintain that property as their primary resident. Then this will benefit them. Next question is, Prop 19 requires that a family member, let me double check something, guys. Sorry here. Make sure. Okay. Again, anybody who has questions, they can call in 408-416-8260. We can answer all your phone calls, or you can type in the chat box and then we will answer that way as well. So the example number 2, Prop 19 requires that a family home continue as a family home of the transferee by what date? So by what date must a transferee establish the family home as her family home? The transferee must establish family as their family home within 1 year of purchase or transfer. So you have 1 year to do that. That's based on how you file your property tax. How do I calculate the property tax impact of transfer principal resident to a child or grandchild? The formula in Prop 19 is complex. Talk to your tax preparer so that way they can help you out there. Or you can go into the assessment estimator, the link right there. We can, again, you can go into the Board of Equalization and then they should have a assessment estimator for you to click on. Next one, I'm gonna go ahead and skip this one because that's just another example of this. This is something that, another source, Santa Clara County Assessor, look at the chart. Again, back then, they allow you to do certain things. Here, you can go anywhere in California. I just want to point out the location replacement property. Before, it has to be within the same county. Prop 19 allows you to do it anywhere in California. Okay, so that's something very, very beneficial. Next thing is purchase of newly constructed property within the 5 year of disaster. Now Prop 19 within 2 years. So before, the current law say any type of property, it can be rental, investment, whatever. Prop 19 only principal resident. That means your primary residence only. So you can also check the source. You can go onto the chart, find out any more details about this. This is what the the chart we got it from, Santa Clara County Assessors. You can pull it up, read more about Prop 19. But that's basically in a nutshell of Prop 19 what's all about. It allows you to blend in your current property tax value and it allows you to pretty much you know, save about $1 million from your assessed value. Let's get back into mortgages real quick here. You know, as you can see, the interest rate has been creeping up since last week. Actually, it went down slightly last week. Today or last Friday, your conforming rates at 2.75, APR 2.812. Your high balance is at 2.875 interest rate with an APR of 2.936. If you have any mortgage questions, you can call us here. We take your live phone call, 408-416-8260. Every single Saturday, we have something new. We will talk about something very beneficial to everybody, and especially people who are investors. You know, everybody talk about, you know, 1031 exchange and things like that. There's a new, it's not new, technically, it's pretty old tax law that allows you to do similar 1031s without doing a 1031 restriction. So we're going to talk about that. A lot of tax preparer or CPA out there who's listening, we're talking about IRS code 453. So what we're going to do is we're going to talk about next Saturday, 9:30 a.m. Pacific Standard Time here, same as, you know, you're out at YouTube Live. We're going to talk about the tax laws 453, which allows you to do very similar things of a 1031 exchange without doing a 1031. So that allows you to do, basically allows you to buy any property that you choose. So 1031 in a nutshell, I'm going to talk more in depth next week, next Saturday, 9:30. So what 1031 allows you, I mean, what the 453 allows you to do is that you can buy your next home. You can buy anything you want. I mean, basically it allows you to get access to cash and do whatever you want with that without the restriction of a 1031 where you have to exchange your investment property for like kind, right, within a certain amount of period of time. Also, you know, you cannot take any money out to do anything else. You have to use all the proceeds from the sales, etc., and etc. We will dive deep into, you know, that next week. Next week we're gonna do a pretty much a live stream where I'm going to be at a different location and one of our speaker will be a different location. So we're going to bring that 453 to you guys, and hopefully it will benefit any and all investors out there. If anybody have any questions right now, please give us a call, 408-416-8260, or type in the chat box. I appreciate everybody joining us this morning about Prop 19. I know we went through it pretty quick. You know, you have any questions, please give us a call, or you can always re-watch the videos. We're gonna go ahead and put this up in about half an hour from now. Other than that, I'd like to thank everybody and hope you a very beautiful Saturday. You know, we have a little rain last night. It's a gorgeous Saturday morning right now. Sun is up. Everything's going to be cleared out. Be safe, everybody. If you haven't got your vaccine, I suggest you guys go out and get them. Again, you know, keep yourself safe and everyone around you. Other than that, please join us, join our channels, like and subscribe to our channel, so that way you can see what's, you know, up and coming as far as rules and regulation in regards to the mortgage industry, where it's going to go, and for real estate as well. Other than that, be safe. See you guys next week, 9:30 a.m. Pacific Standard Time.